Hello everybody, my name is Christian Evans and I am the founder of Sanktuary. Today is the 18th of September 2016 and more importantly it is a Sunday, which means that as a rule of thumb, as a one-off, I'm letting myself wear my company t-shirt instead of a formal shirt to provide this video. Now, the purpose of these videos is to provide an ongoing educational resource. These are for education and information purposes, and nothing here should be construed as any financial advice. If you want to get any financial advice for any investment decision, you should seek that advice at your own accord. Now, basically a little bit about the company. We are technical traders, which essentially means that we like studying the completion of technical patterns in price action, as well as the study of crowds. So what are the people in the markets, how are they behaving in terms of the actions that they're taking. Now, with regards to news, a lot of people have asked us about if we trade the news. We are aware of the news in terms of when it's going to be released, what are the potential outcomes, and therefore price action on the markets that we're looking at. However, we do not employ the school of thought whereby we will trade news solely. For any trading decision, we need a technical setup to show us in the charts. Now, there are a number of different reasons why this is the case, and we've adopted this ideology, but unfortunately for this video it's going to be too long to explain. Fortunately for you guys, there is a blog post on our website at www.sanktuary.co.uk, and a link is provided in the description below. So if you're more interested in, if I want to find out more information about the reasons why we trade the way we do, please do visit us and have a quick look at that blog post, and there are a number of other different ones there for you as well. So what we want to do this week is kind of have a look at a couple of opportunities that we have seen in the markets this week. There have been a couple in terms of how we've traded both the professional side in terms of the money that we manage on behalf of our clients, as well as our own personal wealth that we put to work in the markets ourselves. So the first opportunity we kind of want to look at, let's get rid of this, is the Euro-Aussie dollar. Now, as you can see here from the Euro-Aussie dollar, kind of had this large move between 2009 and 2012, just after the midst of the financial crisis and a few years after. So the market's kind of gone sideways if you ignore these extremes, so to speak. I mean, you could argue here you have got an uptrend, but it's kind of moving back towards this large traded range. So we want to kind of see lower time frame positions. It's important that we do look at the higher time frames in order to figure out where the opportunities are lying. However, in terms of timing our entries, we do want to look down in terms of the minutes and the hours, how the smaller charts are looking, so how we can position ourselves and begin to enter our positions. So if we start looking at the daily, we kind of work our way down from the weekly there, try and gauge and understand what's going on. Okay, that's fine. Kind of got a large level of support here at the 144.8-ish handle region, and you kind of got this downward sloping resistance line here, so it could be setting up as a bit of a triangle sort of formation there. So we keep an eye on that. But one thing we want to look at is the opportunity that's a bit more immediate. There we are on the 4-hour chart. Now, if you kind of look in the middle of July, the beginning of July, beginning to mid-July, up until the middle of September, you can kind of see a technical pattern that is completed. So if we kind of draw, where's that brush hand there, that'll do. If we kind of draw a line all the way across here, got to be steady with this one. What you can see here is we have an inverse head and shoulders pattern. Now, this is quite a major reversal pattern in terms of technical setups, and one that we were aware of as it kind of formed, really. So what's essentially happened, the market is pushed down towards this level of support previously at the 145. Yeah, the 145-ish region. Now, it's important to note when I'm looking at support and resistance, especially on the higher time frames, is that you kind of want to be looking at regions. You don't want to be looking at prices individually. You kind of want to be seeing price action around certain regions. So a collection of prices is fine to actually denote as support or resistance. So the market's pushed down towards the support. The support level is held, and the market's kind of retested again, pushed higher, and made another go. So this completes our first left shoulder of our pattern. Has come back to this point here. It's made a retracement, and the market's pushed right back down, trying to get below this level. As we can see, the market, this is quite a strong support level for the market, and the market's, by this aggressive move to the downside, is trying to break into new lows, and it goes just below this kind of previous support level, but it kind of consolidates there and decides, well, it's not really ready to move further to the downside yet, and pushes higher. Again, important thing to note is that it rebounds directly off this previous point where the left shoulder was. So in connecting those two lines, we kind of trace out what we'll call our neckline. And the neckline is important in terms of gauging where the pattern is likely to complete in the future, and offers here as an inverse head and shoulders as a resistance level. So the market again then is trying to move to the downside for a third attempt, and this kind of gets close to completing our pattern. The market is unable at this third stage to surpass the lows of the previous left head and shoulder, and also the head of the pattern as well. So the market moves aggressively to the upside with people anticipating that the pattern might complete, which is kind of the early adopters, so to speak. And the important thing to note is this neckline. A break of the neckline shows completion of this reversal pattern and shows that the trend might have reversed. Now, as we can see, since the end of May, we've kind of been in quite a distinct downtrend. So trend reversal at the end, we'd look then for the market to move to the upside. So as with all kind of breakouts there on completions of patterns, the market will aggressively move in the opposite direction, showing the trend reversal. However, there are times where the market will actually come back and retest this level as kind of a double check then on behalf of the market before moving towards and continue on its upward trajectory. Now, the reason is this: the market at this level, there are a lot, you'd think because of resistance is going to have some selling pressure. So the market surpasses this level and goes quite aggressively and moves to the upside. The reason why is there is a demand and supply imbalance. The buyers are outweighing the sellers, at least in this immediate time, forcing prices up. However, as there's kind of like an elastic band sort of formation there where the market kind of levels out. It does that aggressive move, but then it kind of levels out, and moves back towards the neckline, which through roll reversal is now support. And we've kind of tried, the market you can see here has tried to push below. The market's pushed below this level and actually closed below it based on the candlestick pattern that we have here. If you kind of just try and get a ellipse here, you can kind of see on that red candle that the market has closed below the neckline. So that can be quite a good gauge as to where the market wants to go, really. However, this time the market did not continue to move to the downside and push straight back above the neckline and then further beyond. Again, we've got the market coming back down and targeting again this level, this 148. So it's quite a strong level. The market now is kind of, even though the pattern's completed, it's not one of these easy patterns whereby the market's going to break through, retest once, and then continue on the upward trajectory, and it's kind of plain sailing for the trader going long. It's kind of been quite choppy, it's quite been stubborn, it's coming back to this level again. What we'll be looking at in the next week now is whether this level continues to hold. So if we get rid of this level here, because it's kind of a bit messy, so we'll put in a horizontal line, so it's a bit more clearer for us to see. Probably about there. That looks pretty good. Now I've drawn quite a thick line here just because we're not focusing on an individual price, so having kind of thick line kind of, support you in identifying regions as opposed to an individual price, which people can rely on far too much. Now what we'll be looking at on tomorrow morning, is the way the market reacts below this level. So we can kind of give a little bit of a tolerance. So we might, this new recent low in this orange highlighted area can be another form of support. We can kind of look at how the market's going to play in this region. So what was going to give us confidence is if we see a lot of long wicks. So if the body of the candle's not really moving anywhere or moving to the upside, but you've got these large traded ranges where the market's trying to push lower, but the market's not supporting it. There's not enough bears there to continue the downward move. So if we look on a higher time frame, let's see. Okay, so that's fine. So the market there so that's the position that we're going to be looking at here. So if we can see the market push down into this level, sorry, getting my charts ready. If we see the market push down into this level, hold in this level, but not push further down below this black level, then we still be looking for opportunities to go long. This previous level here, now we can see it's bounced previously. It could bounce again, so those sorts of opportunities to go long might be there, but we'll probably be looking for quite a bit of movement there. It's going to be quite, I can imagine it's going to be quite volatile. We're going to see quite a few large wicks perhaps below this level as the market tries to push to the downside, and of course it might. This pattern might actually fail, and it's not very clear on the one, so we go back to the 4. Sorry for jumping around. So the market here, it could continue back down to the downside and continue on its downward trajectory. However, with technical patterns, the probabilities are with you in terms of how you trade them. However, they don't always, there's no perfect setup, so they're not always going to work. So there's that quite a small range really in terms of where we're going to decide to go. So are we going to be looking for the long wicks, those sort of opportunities? Alternatively, on the open, the market could just open or push higher. But those sort of opportunities, what's the price action showing us around this region as soon as the market's open in a couple of hours time? Are we going to see the market push lower, in which case we will take a short position, or is the market going to hold in this region and then start to move to the upside where we'll be looking to go long, kind of targeting these previously highs and beyond? If we go beyond these highs here, draw another line here. Go beyond this region here, we'll be looking then for the market to push again to the upside and complete the pattern.